Good morning, ladies and gentlemen. I'm hoping everybody can hear me. I'm going to let you return to your meals in just a while. But remember, there's no real money made eating breakfast. The real money is going to be made listening to the presentation. I'm delighted to have been asked to introduce Empress Royalty, senior moment. I'm delighted for several reasons. I'm always available to help any of my issuers, but it takes initiative. Alexander had the good sense to ask, and I think maybe that's indicative of the sort of hustle and drive behind Empress. Disclosure of conflict of interest. I own stock, like I own stock in all the exhibitors, so anything I say may be tinged with self-interest. I always joke that I'm party to numerous conflicts of interest, and I'm always soliciting for new ones. So keep that in mind. Why Empress? I've been involved in the minerals business, mostly in the oil and gas side, for about 40 years. And probably risk relative to reward, if you're patient, it is the best part of extractive industry. I'm not trying to say it's necessarily the highest reward. I said if you juxtapose the risk to the reward, it's probably the best part of the industry with regards to investments. What you look for in royalty companies is really three things from my point of view, and I should say royalty and streaming companies. You look for the delta between price and value. In other words, what is the enterprise value of the company, which is market capitalization plus cash minus debt, relative to the price. Are you paying a fair price for the royalty company? The second thing that you look for, which is important, is any durable competitive advantage that they may have over other royalty and streaming companies. In other words, is there something about the constitution of the company? Is there something about the people? Is there some factor or group of factors that would allow them to be more capable than their competition, whatever you define as their competitive group? The third is access to capital. Mining is a capital-intensive business. And if the management team doesn't have a capital acquisition strategy that rivals their royalty acquisition strategy, they're going to fail relative to the competitors. You will find these, obviously very attractive, with one possible exception. People here smiling, carrying forth, but I assure you that they're very viable competitors. So when you listen to this story, and I'm not going to give you the story for them, what I'm going to suggest to you is that you listen to the story with regards to three components: whether or not it is fairly or unfairly priced, or the third alternative, which is the best yet, whether it is cheap. The second question that I'm going to ask you to focus on is, does the company have a durable competitive advantage relative to other small royalty and streaming businesses? The third thing that you're going to have to determine is, are they going to be competitive relative to their peers in the capital acquisition strategy? In other words, are they going to attract backers other than, say, me and you? When you have ascertained that, assuming that you are, like me, inclined to royalty and streaming and willing to speculate in the smaller end of the royalty and streaming business, then I think the investment decision, or in this case the speculative decision, will be very clear. They're trying something unique this morning, which is to say, rather than stand and deliver, they're going to try an open discussion. And I like the innovative nature of trying different ways to introduce the investment community to their story. So, Natasha, the rest is yours. Thank you. Thank you, by the way, to Empress for your sponsorship of the symposium, and thank you in particular, Alexander, for sharing your birthday with us.
Thank you so much, Rick. Thank you for having us here at this, what is arguably one of the most important conferences of the year. And thank you for encouraging everybody to pay very close attention to what we're about to discuss. And I know everybody, your time is very valuable. There's lots of things you could be doing this morning. There's other breakfasts. So thank you very much for choosing to be here with us. So my name is Natasha Frakes. I'm the VP of Investor Relations with Empress Royalty. I'm a newer addition to the group, so you may not recognize me. So you may be wondering why I'm doing the introduction here. But I can assure you that that dynamic is about to shift as I introduce my colleagues. I'm here with our CEO, Alexandra Wood-Sharon, who a lot of you may know, our Executive Chair, David Rhodes, and our VP of Corporate Development, Nora Pincus. So with Rick being a large shareholder, that probably brought a lot of you here. So just out of curiosity, I see a few faces that I recognize, but show of hands, how many people here are currently shareholders? Amazing. That's great. And how many are very new to Empress? Okay, perfect. Okay, well, we're going to change that. So while you enjoy your meal, I'm going to be asking questions to my colleagues here. And then I'll open the floor if we have some time for you to ask some questions as well. So I'll start by introducing myself a little bit more. I've had a career in public communications for over 12 years, working as a TV news reporter and anchor. After about 6 years in that field, I transitioned into the mining sector. I was working on the exploration side of the business with a handful of companies for about 6 years. And then I joined the Empress team a couple of months ago, and I'm thrilled to be here working with this group who all have very impressive backgrounds in mining. So why don't we start there? I'll start with you, Alexandra, being the CEO. So you worked in structured finance for a good period of time prior to founding Empress. Can you briefly tell us about your background?
Yeah, so I started my education with a commerce degree, and then I joined PricewaterhouseCoopers in 1997, just after BRIEX, so everyone was jumping out of mining, going to the dot-coms. After PricewaterhouseCoopers, I joined Endeavour Financial as an analyst, and David will talk more about Endeavour Financial in a moment. I moved my way up through the ranks to become Director of Structured Finance for over 10 years in London.
Thank you very much. And David, your career in mining is quite extensive. But why don't you summarize how you got into the industry and what your journey's been like?
Yes, thanks, Natasha. So it's interesting when someone asks you about your career and you look back and realize it's been over 30 years. Although if you look at any of my bios, it's 20 years plus, but in reality it's 30 years in the business. I started as an investment banker, London-based, Barclays Capital. And then, after a few other jobs within the investment banking world, I joined Endeavour Financial, where I met Alex and worked with Alex in London. And then, it is nearly 15 years ago, we did a management buyout of Endeavour Financial. Endeavour Mining came out of Endeavour Financial, and we took the financial company out of the mining company, and that's obviously still listed in Toronto. So my background is very much investment banking, and then as Endeavour Financial is one of the largest financial advisory firms in the mining sector. And that's really, and we'll come to the background of how Empress was formed, but it came out of Endeavour Financial and seeing an opportunity which couldn't be missed.
Perfect. Yeah, we'll talk a little bit more about the relationship between Endeavour Financial and Empress a bit later on. But first, Nora, you're a lawyer by trade, actually, and you've worked with some of the largest mining companies. So why don't you tell us a little bit about that?
You know, so when I graduated from law school some years ago, I won't say how many, but I knew a little bit about mining, but you know, I wanted to work internationally, and I wanted to work on the big, interesting deals. So mining made sense, and so I spent a number of years working in structured finance, M&A, corporate financings in the mining sector, which is, I think, one of the best training grounds you can have for learning how to structure deals, see what works, what doesn't work. You know, as a lawyer, you'll see 10, 15 deals a year, so it's kind of like a finance boot camp. I transitioned into the commercial side about 5 years ago, and I think really that legal training in the background has been pretty instrumental in helping me be creative and think in big and strategic ways about how we can structure things to get a win-win for everybody involved in the transaction that we're putting together.
Perfect. Now let's talk a little bit more about Empress and really how it started. So, Alexander, you saw a unique opportunity for a royalty and streaming company that was a little bit different than what already existed. Can you tell us about that?
Yeah, so at Endeavor Financial, David and I were saying that the streaming companies were doing bigger investment sizes, $100 million plus, and that no one was providing that streaming finance solution to the junior companies. So essentially, that's how we saw. We knew there was a lot of demand and opportunity, but essentially, that's how we set up Empress, was to provide that solution to the junior side, sub sort of $25, $50 million investments.
Yeah, and we should add too that Empress is still fairly a new company. I mean, just yesterday, as we were celebrating Alexander's birthday, we were also celebrating Empress's birthday, 4th birthday. So still a very young company. David, you were also involved in the co-founding of Empress. What else can you add about that?
Yeah, the key thing behind the company is that as Endeavor Financial, and I run that business, we were looking for solutions for our clients. So if you want 100 million stream, 200 million, you got the Wheatons, the Royal Golds, and blah, blah, blah. So a lot of people in the big space. There's no one doing the small streams. So as a business, we needed someone to provide that capital. And we couldn't find anybody, so we thought, what a great opportunity. There's no competition in the space. Creating these small streams, what's the best thing to do? And that's the setup of Empress. And that's how it was born, and that's what it's doing now. And it's a great opportunity because we're still finding limited competition in the small space.
Small space, but still mining companies that are either producing or very close to production, so immediately generating revenue for the company. And David, you're also the managing director of Endeavor Financial. So why don't you talk about the strategic partnership between Empress and Endeavor and how it really accelerates Empress's growth?
And I think there's two things. Firstly, Endeavor Financial, we're one of the founding partners of the business. Obviously, I'm the chair as well, so very committed to the business. Apart from being shareholders, we are also the investment manager. And that really gives the company access to the team behind me, the guys who do the work. I just talk and direct things. So the guys doing the work, the modelers, the geologists, the technical guys, they can help when needed, when Empress needs that support in that respect. But the key thing that we do as a business is we drive all the small streams and royalties to Empress to look at. I mean, we're global as a business, Endeavor Financial. We look at all the opportunities we do in the space on a daily, minute-by-minute basis. So anything that comes in the radar of Empress is pushed towards the team to look and review. So it's quite a powerful source of deals and opportunities for Empress.
Yeah, exactly. And Nora, as the VP of Corporate Development, you play a crucial role in evaluating some of these new assets. So can you describe what you look for when you're looking at some of these potential investments and how you're driving the company's growth?
Sure. So first and foremost, it's about what's in the ground, right? So the asset is the first thing we're looking at. Is there something there? And then the second thing is management team. Can they pull off what they need to be able to help us have a profitable stream? Now, we focus on producing assets or very near-term producing assets. And so when we're looking at a new opportunity, time to cash flow is always very important, particularly if it's a development asset. We want to know that our capital is going to go into the company. They're going to be able to use that to get into production quickly, efficiently, and start cash flowing. So metrics like that are always very important to our due diligence. And then we're also looking for companies that can take a smaller investment and really turn that around and create significant value from what would be a smaller size investment. And because of that, we're really looking in jurisdictions that we think are overlooked in the royalty and the streaming space. We focus on South America and Africa. We're looking at things in Asia. And traditionally, those are areas where you're not seeing a lot of investment from the royalty or stream creation side. And I think that really helps us unlock a lot of value.
Definitely, and we focus purely on gold and silver. And we've realized that we are the only publicly traded company that is 100% gold and silver. So that leads us to talking more about the portfolio. So Alexandra, talk a little bit about our primary investments and what our total projected revenue outlook is.
So we have 4 key assets in the portfolio at the moment. We've got 3 producing assets and 1 that's just coming online. We're in Peru, Mexico, Mozambique, South Africa, and we can talk more at the booth if anyone wants more details on any of these investments. We've got pictures from the site visits. We can walk you through any of that as well. But the forecasted revenue over the next 5 years, cumulatively on those initial 4 investments, is about $60 million US in revenue.
Yeah, and if I can just jump in, sorry to get off script here, but I'm, as I said, I've been here as in the business 30 years. I also run businesses myself. When we set up Empress, we really focused upon cash flow, generating as quick as we can cash flow, for 2 reasons. Firstly, without cash flow, how does your business survive? You've got to get past that tipping point of covering your costs and filling up your treasury with cash. So, Alex has mentioned the investments we have. They were all producing or near producing assets. So we've got cash flow coming in the business to make sure we can, we're break even and we're putting money in. That allows us now to be able to reuse that money to increase and diversify our portfolio, which is the key thing. So this is a strategy we put in place. We're not looking for assets that maybe in 10 years produce money. We're looking at assets to generate money now for the business which we can reinvest. So that's the key strategy in the portfolio.
Definitely. And obviously when we're looking at these assets, due diligence is a huge part of the process. And we're very fortunate in that we can use Endeavor's expertise in this area. So maybe you can talk, David, about the team at Endeavor and their qualifications that help us to make sure that any asset that we bring into the company is going to be accretive.
Yeah, so I think I mentioned we've got the team behind Endeavor Financial. We've got guys like David Lang, who's 40 years, nearly 40 years in the business. He's run operations in Africa, he's run operations in South America. He's part of our team, and he's one of the first people we talk to when we have an opportunity. He does an initial review of the opportunity. With a guy with that kind of expertise, he knows how mines work, he knows what the operating cost should be, he knows the pitfalls and the positives of that. So he's the first kind of arbiter on deals. But with the guys like David Lang and people like myself, and Rick Rule doesn't really mention this, but when you've done this for a few years, extensively, as Natasha says, you get a sixth sense. Firstly, mining is not a huge industry, so we usually know most people in the industry, know people on the boards, know the management team. That with the operations, that with our knowledge over 30 years, you have a sixth sense whether it's a good transaction, it's a good mine, and it's a good opportunity. So yes, we do all the due diligence behind it to verify that. But it's just something when you talk to a company, you look at the mine, you look at the opportunity. And that's something which experience, as you guys know, in probably your own businesses or in mining, whatever your businesses are, that's what you get with experience. And that's what we have on the team.
People often talk about the royalty and streaming space starting to get very competitive as there's more royalty and streaming companies popping up. And so, Nora, I'd like to ask you what gives Empress a competitive edge when it comes to securing deals, and how do you leverage this to our advantage in your negotiations?
Yeah, I think just as David said, it's a small industry, and many of us have been around for some time, and because of that, it's our relationships, it's the people that we know in this community. We are fortunate that we have very, very infrequently been involved in a competitive process for creating a new investment. It has almost always come out of a relationship that a team member has, whether it's through Endeavor or otherwise. And why that matters is not just because it creates value, through not having to compete with other parties, but it's because there's already a trust relationship there, that we know these people, we know what they've done before, we know the teams, and that's really important because, I'm not one of those people who likes to negotiate for the sake of negotiating. I want to make a deal. And I like to think that if you're across the table from me, you also want to make a deal. And so if you have a relationship where you trust each other going into it, you can cut through all of that posturing back and forth and just make a practical deal that is going to work for the company. It's going to work for Empress. Because ultimately, as a streaming and royalty company, we need the mine to be successful. And so we're really looking for shared upside and structuring in a way that is going to help everybody achieve that, I think, is paramount in this business.
I don't think we can talk about the upside without talking about risk management as well. So Nora, how do you assess and mitigate risks when considering new assets for Empress's portfolio?
Are you saying that there is risk in mining? I can't believe it. No, I mean, that is always top of mind, right? And, but all risk is relative, right? And so I think that the most important thing is to be able to have the depth of experience to know what's a real risk and what's a perceived risk. Because there are a lot of things that might sound, risky or, dodgy, but that can be managed or structured around. And then I think that there's also a lot of risk that people fail to see. For example, David is always fond of saying, what's riskier than not being able to permit a mine? And that's the situation that you are seeing more and more frequently in Canada, in the US, where really long permitting timelines. Whereas if you look at other parts of the world that people might think, Africa, certain jurisdictions, that we know to be stable with a consistent rule of law, you can put a mine into production quickly and have a wonderful workforce, get gold sales out of the country, things like that. And I think that when you think about risk, you have to look behind the, top line, this is, an emerging jurisdiction, and really evaluate what are the real risks here. Because ultimately what we want to see is getting gold or silver out of the ground efficiently, cost effectively, and then being able to get it out of the country. And at the end of the day, those are risks that take, I think, a little bit of experience in order to identify and then structure around. So those are things that we're always keenly attuned to. And David might have thoughts on this.
Surprisingly. The other thing that we structured here is that we're very keen on production companies. So these companies are already in production. So they've already got the permits, they're already operating, they've got a team. So it's easy to assess a producing company when you come to due diligence. You've got monthly reports, you've got operating performance, you've got all the cost structures already in place to be able to assess financially. Also legally, have they got all the legal titles? That's easy to assess when they're in production. So by being more on the production side, or very close to production, where you have to most mining companies won't start building or constructing without permits. So you've got that kind of risk taken away. All the studies are completed. Feasibility, construction, engineering, all the drawings are done. So getting very close to production or producing actually de-risks a lot of the opportunities we see. And that's our strategy. Our strategy is to try and de-risk mining because, as Nora, and I'll tell anyone, mining is a risky business. A lot of businesses are, mining is one of them. So our expertise is de-risking it by making sure at the production stage where a lot of the risks have already been overcome and there's a lot of facts and numbers we can work through on the financial side.
Now, Rick talked about it a little bit, but being that we're at a mining conference with lots of mining companies, I think it's important to discuss how investing in a royalty and streaming company such as Empress can be more advantageous than investing directly into a mining company or directly into gold or silver. So Alexandra, as a royalty and streaming company, we invest directly into mining companies for a royalty, which would give us a percentage of a mine's production, or a stream, which would allow us to buy a percentage of the metal that the mine produces at a steeply discounted price. So what makes this business model more beneficial for investors?
Can we jump to the slide with the royalty companies outperforming?
Sure.
There we go. So here is one of my favorite charts when you're looking at the gold miners ETF, the price of gold, and how the royalty index has been over the last close to 20 years. Royalty companies have really outperformed. So taking that premise, there's a lot of different types of royalty companies to invest in. You're getting, with Empress, direct exposure to gold and silver. You don't have the operating and capital costs compared to typical mining companies. And that Empress, because we're focused on the creation side, we really are going to be generating a lot quicker than a lot of the other ones. If you want to add on to.
Yeah, I'm also a director and chair of a mining company, which Empress has a royalty on, and that's partly why I'm involved with that. And it's tough being on the board of a mining company. Apart from a great team at Empress, it's way easier when you're an investment type company like Empress, where all the hard work is put on the mining company. And obviously these guys structure deals where they have proper legal contracts in place with the mining companies to perform and produce, and obviously produce a revenue for the company. So outsourcing to a mining company is a very cute and smart way of doing it. As I say, when you run a mining company and you've got mines around the world, it's a tough business. And
Oh, yeah, sure, go ahead.
So, in terms of de-risking, the two factors that seem to be endemic in gold and mining industries is the toughness of the personnel and also their ability to manage cash flow and be a good fiduciary of cash. So it's a rare talent for you to do that. How do you determine if the board has got the toughness to stick with it, but also as the talent creates more income? Because you can always pick the top guys that have done it over and over again. That's one way. But you're dealing with people that may not be famous yet. And so how do you determine their skill sets and capability in managing cash flow intelligently and their toughness to stick it out when things go bad?
yeah, so just to, did everybody hear the question about toughness of management and managing cash flow? That's the
For the live stream. For the live stream, just reiterate
Yeah.
a bit.
That's the summation. So when it comes down to management, you're right. We're not dealing with the barracks. We're not dealing with the guys at the top of the tree in that sense, management-wise. But the key thing for us and our due diligence is, as Nora mentioned, within either directly or indirectly, we'll know some of the board members. We'll have worked with them in the past. The management teams, often we know them from previous transactions. It's a small industry, so that gives us a little bit of inside knowledge before we actually get into a transaction, before I do our due diligence. But when it comes to cash flow and then managing it sensibly, in this business, it's a tough one. We do have, a lot of geologists, a lot of mining engineers running mining companies. And that doesn't mean they're economic experts. It doesn't mean they understand the basics. So on the board of most of the companies we are involved in, you'll find we rely upon having a finance guy on the board or a very good CFO who understands that. And our latest investment was in South Africa. And the CFO, Andy Bishop, I've actually worked with Andy twice before with different companies. So I had comfort that the CFO was, as you say, a good manager of cash flow, because we worked with him in Guinea and I worked with him in another company before that. So that gave me personally, when we're looking at it from the recommending it to Empress to look at, that we had a good CFO who knew cash flow, knew how to drive value from the business. And obviously then we did the due diligence on the other management and the board on that basis.
The other thing I would just add quickly is, similar to what David said before, is because these are companies that are in production or very near-term production, we have a pretty good idea of how they have managed their cash flow to date. And so going back and looking at what they have done, whether it's in a development project, in managing the CapEx, are they on budget? Why are they over? Things like that. Because I think, especially in this inflationary environment, when we talk about cash flow management, what you've done yesterday actually really matters a lot more than what you've done 10 years ago.
Mm-hmm. Just before we take some more questions, I'm going to ask a couple last questions to the team here. I do want to touch on the investment opportunity at Empress because we are trading at a steep discount to our peers. We're trading at about 50% of our net asset value. So David, can you get into the numbers to explain the investment opportunity that we have here and also talk about why you think there is this discrepancy in the market?
Yes, thanks, Natasha. So I think anyone who heard the presentation Alex did yesterday, we're lowly rated versus our peers, which is an opportunity for people here to invest. We're only 50% of our NAV, so we're market cap, I think
it's around 30 million.
Yeah, so it's about 31 million US. But our NAV, we're 50% of NAV. We've got $60 million of cash flow coming in over the next 5 years. So we're at that point where, as I think I mentioned earlier, we've got the cash flow coming in to reinvest. And I think from investors' point of view and the market point of view, we can talk a good game about the money coming in. They need to see the money coming in. And that's what you're going to see now from the quarters as we do the announcements and do our quarterlies, the money coming in, which we can reinvest. So I think the market needs to see that, and then people will go, okay, they can talk a good game, but they're also showing us they can play a good game. And I think that's one of the aspects of why we are discounted compared to some of our peers.
Thank you, David. Okay, now last question for our team. Alexandra, we have to talk about growth. Empress has grown very quickly. We've been doubling our revenue over the last few years, and we're on track to do that again. So what are your plans for continuing to drive Empress's growth?
It really is bringing some new investments into the portfolio. I know Nora just joined us in January. We're aggressively looking to grow it with the right investments. With Empress, we do go through that rigorous due diligence process. We're only bringing investments into the company that make sense. We're all large shareholders in this company as well. So it really is finding those key investments to bring in. So we're hoping to bring some new investments in this year and increase our revenue even further than what we're projecting just on those 4 initial ones.
Perfect. Thank you. Okay, we did have some more questions, so sure, go ahead.
Hi, good morning. I've spent a career overseas. Do you guys experience any issues or challenges with the host nation that you're working with, the embassy? Do you have any kind of pushback from any of the countries that you're working with? Any difficulties? Because I know that's kind of inherent in the space that you're working in, regardless of what the profession is.
With Empress, no.
So as few people can't hear the question, so
Okay, maybe we can pass the mic. Do we have a mic?
we can. So he was asking about the host nation, and if we ever run into any problems with working overseas, if we ever get any pushback from the host nations that we're working in.
Yeah.
Are you working with the U.S. embassies in the countries that you're in?
And if we're working with the U.S. embassies in the countries that we're in.
Okay. No, as from Empress, the countries we've gone into, we've been in before. We know how to structure there. We've not worked with the embassies. We haven't had to. We've had the companies we're investing in have excellent relationships in country. That's part of our criteria we go through. So, we went into Peru during the elections a couple of years ago. The group that we invest in there are Peruvians, so it was a Peruvian-owned company. They had excellent relationships on multiple levels of the government and the communities. So we've been, that's definitely part of our criteria of how we're investing. Because of our experience in Endeavor Financial, we are going into more, we're not necessarily looking at North America, but again, it's using our experience.
Yep, go ahead.
I've got 2 questions, actually. I'm trying to make it brief. One is the current environment really high on bringing deal flow that's of high quality? Because you're kind of skipping off the top. Well, you're not just going out, the super ones that are going to climb string tie and the boots in Texas rather than the highfalutin guys in Midlands with their suits and everything else. If you go in with local people, it's usually better because you've already made friends. But anyway, deal flow.
Did you want to?
Yeah, so you're asking about deal flow and what that looks like right now and the environment for deal flow, and also made a comment about not working with the U.S. Embassy, but rather working with local authorities.
Yeah. Yeah, I mean, I think that there is a lot of opportunity right now for a company that is, involved in the royalty and stream creation side. I think that is driven by a number of factors, one of which is certainly that equity markets are not performing in the way that we have seen them in other commodity cycles previously. I mean, as I'm sure you've heard many talks throughout the last day, gold prices are up, gold equities are flat, and that doesn't make a lot of sense. But that presents a great opportunity for a company like us that provides alternative forms of financing. Because if you're a company with a fantastic asset, you need to expedite growth with these commodity prices. And so if you can't go to the equity markets, we are a fantastic alternative for that. So I think that while that's a challenging macroeconomic factor for the industry, it's presented a very interesting opportunity for us right now.
Do you see that changing over time, or do you think that's going to last a long time in terms of the opportunity?
Yeah, so business-wise, I can talk about today's market, and as a business in this space, we obviously look forward. The commercial bank finance, they're leaving mining. So some of the big players like BNP, the French banks, they're now not called mining, they're called critical metals and EV sourced materials. So they've changed their name. Mining doesn't exist in their title. And lots of reasons. I mean, it's very sad to see Victoria Gold, what happened in Yukon. There were 5 major banks lending to Victoria Gold, and obviously they had to put a default notice in because they've had a landslip, which obviously stopped operations. That does not help for the commercial banks, the guys doing the cheap financings, to be involved in the industry. And there's a few examples recently of that, which is not good for the industry. But I'm not trying to make a bad thing and a good thing for Empress. What I'm trying to say is those sources of capital drying up in the industry. Private equity money is growing, and that's increasing to fill some of that gap. But those guys, they've got billions. So looking at 50 to 100 million ticket size investments. And that's why Empress is in such a great position here, because sub 25 million, the private equity guys, they've got private jets to fund, they've got wine cellars to fund. They can't really do small deals, doesn't make enough money for those guys. But the team here are willing to work hard and make a great return, but I think a substantial return for doing the smaller size. And equity markets, as Nora said, they're tough, and they always will be tough in mining. And examples, until the generalist funds get back into mining, which they aren't, it's still specialist funds, there isn't the volume of equity deals available, especially for the small guys. If you look at in investing and you want to get in and out of a stock, most of the small mining companies, they have limited liquidity in their stock. So where do they go for 5, 10, 25 million? They come and talk to us because we're fairly flexible, we're fairly quick relative to an equity placing or relative to debt finance. So we're in a very good space. And the one thing that we should pick on it here is when gold price is above 2,000, if you're a producing gold company, you want to expand production. You want to make as much gold coming out of your asset as you can to get that $2,000 and get that a nice high margin. And that's where, for example, our recent investment, that's exactly what happened. Those guys had a mill, they needed money to do the underground development work to feed that mill and get it maxed out. maximize capacity. And that's the kind of transactions we're looking at, where we can expand production, maximize revenue for the company, obviously, and that maximize revenue for Empress.
We've just got about 2 minutes left, so we can take a couple more questions.
A lot of discussion about the value of relationships with management and the various operating mining companies for lots of good reasons. But from their point of view, I can see where having those relationships gets you in the door, to discuss a deal. But from their point of view, does it ultimately just come down to terms and dollars and cents, or can you get and can you enforce the no shop provision from the get-go?
Yeah, I mean, listen, I take your point. Yes, it gets you in the door, but back to what I said before, trust matters. I mean, you're going into a business where we're going to have a relationship for a long time. And so who's across the table from you for a company matters. Does your financier support you? And are they going to be in it, when things get hard? And that I have found to be extremely important on both sides. Certainly from the company side as well. So I think that's valuable.
Yep.
Thank you. So I have a question regarding the criteria on life of mine, for example, and also the exploration upside, because we've seen some spectacular deals where the company provided capital for a specific resource, but the huge discoveries made, production go off the chart, and it's like, yeah. So you may have limited access to those kind of deposits. So what's your kind of criteria there? And you can provide info or what's the current life of mine of the assets you're currently, are investing in?
Yeah, so good question. And I think I can partly answer that by going back to my original comment about cash flow now. So we did, when we set up the company, look very much for bringing the cash flow forward. So we very much look to maximize cash flows for the next 5 to 10 years. To do that, you've got to give up some of the long-term opportunity. And that's what we did on a few of our investments. We now have that cash flow coming in, and we're now looking to extend and do life of mine. So quite a few of our deals may have a step down, and they have a longer stream or royalty going onwards. But that's very much, it was done on purpose, really, to generate the cash flow now, to get the business cash positive and drive that revenue and obviously the reinvestment opportunity. But we can now focus on more long-term. So probably, for a stream, not high ounces now, high ounces forever, which is really I think where your question's coming from.
Perfect. Just one more question.
Performance risks if the deal goes bad. A lot of risk management. If the trade goes bad, how do you kind of factor in your management?
Okay, that question's about performance risk and if a deal goes bad.
At Empress, we take security over the assets. In most cases, we're first-ranking security. So we do have that. For example, the one in Peru, we invested $10 million. The plant and the infrastructure around that's worth close to $100 million. We never want to be in that position. We want to work with the companies. We don't want to operate a mine, but we do have that security in place. Everything's registered in land and country. So we have mitigated a lot of the risks, and that's particularly why I like the sort of more the creation side and the streaming side. We're not, we are able to structure the deals in that way so that we have that ability to de-risk it.
Yeah, I'd also say and on Alex's point of creating them, so we basically create a contract with the company. So we can insert in that, performance criteria, minimum delivery amounts, things that allow us to then talk to the company if they're not performing, get involved. We've also got expertise we can lend the company to assist them if there are issues as well. But having a contract which is unique and structured allows us to get involved if there are performance issues, if there is requirements, and we do need to get involved if we do. In most cases, though, the actual percentage we're taking from the revenue is very small. So, you've got of 100%, we may only be 3% of 100%. So that gives us a natural bit of comfort if there is, a small or some performance issues.
The other thing I would say in terms of writing a contract is it's a small thing, but reporting from the company so we can have monthly detailed reports about what's going on operationally so we can help them manage some of that risk and we know what's going on is hugely important to us. And that's again why the creation side is really important, because we know what's going on with the company in real time.
Well, how do you enforce that? Because a lot of companies don't like to be, they kind of running their own show and they don't want interference. They tend to be self-driven. So they figure they already know why they should report. How do you enforce getting that data?
Well, you write it very clearly into your purchase and sale agreement, and you make sure they report. And that's actually not an issue that we've had. I think that goes back to having trust going both ways, and we can be a great resource.
Is there an advantage to them for reporting in terms of that they get guidance or information from you back that helps them consider that valuable? Because a lot of times too, it's gee, they're like people doing reporting, and they sometimes don't see the numbers exactly right.
To be honest, I don't think, I think you're right. Most companies just give me the money and I will do my job and I'll do best to it. Who wants to report to this streaming company on a monthly basis and these guys get on the phone every month and go, blah, 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 blah. I mean, who wants that? Yeah, well, I don't think they have to worry about who knows about mining because we do, so that's that's not the issue. But I think the point is, and I've been investing in mining for a long time. I often get comfort when I look at a mining company, and I see that either there's bank financing, a third party is invested in that company. Not equity, but from an instrument like Stream, because I know that company, whether it's an investment bank or whether it's a commercial bank or a streamer, has done their full due diligence on that company to invest that money. So in quite a few cases, we've invested in a junior mining company, and the stock price has gone up. First, they've got capital, which they can employ and expand production, but secondly, they know a third party has done all that due diligence to verify that it's a good company and the management know what they're doing and it's going to make money. So I think there's a bit of comfort there from the management point of view. But yes, do we have issues? Do we have management to go, I don't want to report to you, but guess what? No money. No reporting, no money. We're good stewards of our company's capital, and to do that, you've got to understand, as Nora said, what's happening on the ground on a monthly basis. And I know the team spend a lot of time every month, going through the reporting, but also on phone calls, so that these guys have, weekly and monthly calls with each one of our investment companies to make sure they're performing and make sure the future is looking bright. And if it's not, then obviously what remedies, what are they doing to make sure it is going to be bright in the future?
I think that's a great note to end on. Future's looking bright. Thank you, everybody, for being here. If you have any further questions, we'll be at booth number 7. I also encourage you to visit our website where you can find more information. Sign up for our email list. We put out monthly updates. If you want to sign up for our email list, I can also scan your badge. And we have some presentations for you to give you at the door on the way out. So thank you so much.